to get everyone to join. I don't know what's up with my green screen or why I'm floating, but here we are. And it's always so great for everyone to say hi and where they're from. So if you're joining and you want to pop that in the chat, please feel free. Thank you. Hello. So many places all around the world. Love it. And London, super fun. Fun fact, my last name Inskip is from my British husband. All right, so let's go ahead and get started. I am excited for what we're going to do today. This is very different than the usual sessions that we do together. Normally, I spend usually hours upon hours providing some very specific educational content around options or technical analysis via a PowerPoint. However, since we have been doing the series this month and the theme has been more on artificial intelligence, I thank you for that. I thought that we would go through some of the processes around analysis for securities and the broader markets, inclusive of picking stocks, but how to analyze things utilizing artificial intelligence. So I'm really excited about that. If you are familiar with some of my work that you see on CNBC or watch me on any of the other type of segments outside of OptionsPlay when we talk in really details about the broader markets, I tend to get in what we like to call rabbit holes. I'm known notoriously internally for that, but it's essentially just hours of a process that leads to really interesting conclusions or findings. That is how I've found some really good stock picks. So I'm going to actually walk you through that process. I have started a lot of this. There is a research study that I have been working on for quite some time. So I'm going to bring you into that, where I'm comparing the .com bubble to the AI bubble, or we're not going to call it an AI bubble, to AI, to see if there are any type of bubble characteristics or any type of similarities. I'm actually going to present that on a CNBC segment tomorrow evening. So you have the insight into the thought process before we actually do that. So that's going to be certainly really, really interesting. Normally when I have my process and I am going down what I like to call these rabbit holes, I have a lot of data and resources that I go through, and it usually takes me about at a minimum a week to go through if I'm doing it sporadically, or sometimes I'm up till 2 or 3 o'clock in the morning just going through data and analyzing it or pulling it into Excel and having different I suppose findings coming from it. Now, with the influx of artificial intelligence, and why I've been really excited about it and talked about it extensively, is because it has increased my productivity with those type of research. And so Tony, within the last couple of sessions, have taken you through the technical analysis side of generative AI language models and how that can be utilized to enhance your trading strategy from a technical perspective. What I'm going to take you through is how we can use it to analyze the broader market, how we can then spot trends on the broader market in comparison to history or anything that we're thinking of, because now we can use it to browse the internet and pull from specific sources. So I'm talking, even when we're looking at the .com bubble, we're going to look at consumer trends. We're going to spot comparisons and try to understand it, so we have a really good detailed understanding of any changes and drive some conclusions that are backed by data. That's extremely important. And then finding securities that could be potential trade ideas from there. And that's, of course, on the bullish or the bearish end, and also understanding where things happen. So what's really important when utilizing these features with generative AI models is the way that we set up our prompts. So I'm going to walk you through that. I do think it's important to be polite to generative AI models, so we'll do that too. So just know you'll see that. And then additionally, I like to apply the anecdotal aspect as well. So I'll walk you through that. For example, I work a lot in compliance and have within my 15 years in the finance industry. So anytime I know that there is a large issue like a dot-com bubble or something that shakes market mechanisms or mechanics, there's always an SEC study that follows. And with that SEC study is normally a recommendation of some sort of regulation. So that's something that I really want to make sure that I understand when we're doing a comparison of the dot-com bubble versus AI. So what happened with history and what goes on from there. And what I love to do, instead of just asking direct questions to ChatGPT, so we're going to use ChatGPT, Bard, we're going to use the newer models. We can pull in some plugins, something I am working on that I wasn't ready today, but I want to set up a database that we can pull from and chat with data. We can at least walk through how to do that and then go from there. And really, we're just doing my CNBC research real time. So hopefully you enjoy that. Feel free to stop me questions along the way, but it should be some really good, interesting data. I've played with it quite a bit. And I'll go ahead and share my screen. I've had ChatGPT even analyze earnings reports. And so there's a lot that goes into it. So without further ado, let me share my screen and we will go through it. Great. And I do believe that there are some variations from the pro version versus the free version, but some of it is in beta and others are not. So I think that's important to know. But let's go ahead and look over here at the desktop, and I've got a lot that's up here. All right, so first and foremost, what I'm going to activate is I want to make sure that I am browsing the web. I use Bard to give me charts and data to back any thesis. And then I use ChatGPT to help me define my thesis and understand my process. I have it on plugins right now. I'm going to turn that off. But what I'm going to do to make sure that I'm using the Bing version is the Model 4 and for the browse with Bing. That is actually exclusively for Plus users. So there's your answer right there. So I'll walk you through that. Bard, you can still use without having the Plus features for ChatGPT, but nonetheless, here we go. Whenever I start a conversation, and I actually have another one, I've just got too many sensitive stuff over there. I'm not sharing that side of the screen where I have ChatGPT make my prompts for me. However, so I have ChatGPT optimize itself, which I think is a wonderful tool. What is important whenever we are creating a prompt for ChatGPT is to give it a role, give it a goal, and give it some type of context. So that's what I'm making sure that we're doing. So I'm just going to copy and paste. And sometimes I've got really poor grammar and it doesn't matter. And that's absolutely fine. The prompt that I started my analysis with, and I'm curious if it'll give me the same thing. But I tell it what it is you're a highly skilled analyst. You're the best because it's backed by artificial intelligence. Again, I'm really, really nice to it because that's just from the South, I suppose. I tell them that they are a stock market commentator for CNBC, and together we're going to create some really valuable insights. So I'm hyping it up, and then what we're being tasked with and what I would like the outcome to be. So you're giving it a role. So to get your head in the game where you're going to be, some context and a goal. And then what this will do from here, instead of you saying, okay, here's what we should do next, it's going to tell you what you should do next. And I would prefer that because artificial intelligence is going to be 10 times smarter than me. So let's see what it comes up with. Here we go. So now it's going to break down what we should do. And I think that's fantastic. And I didn't tell it any of this. Perfect. All right. So that's exactly what I'm looking for. I want to know the correlations between the 90s and the 2000s. Great. Current of AI. Sometimes it scares me having it look up itself, but okay, the fundamental differences, that's absolutely fine. So if I want to start with historical context, so that is a good question, Chris. This is not vintage info because we turned on the new model and we're having it browse the web. So it's actually going to have access to current data. I've used it earlier in a prompt to say, hey, can you analyze Nvidia's Q2 earnings so you can give me an indication of where valuation is and if you spot any trends, because I think that's really important. So what I do want to apply to this is make sure that I give it some anecdotal feelings or context around it. So I would say let's look at the historical context. It is important to look at the number of IPOs during this period, the number of, to turn it on, it's the 3 dots down here. I'm not sure what it's going to show you. Let me move it over, hold on. You have to go to your settings. So you go to your settings by, so settings right here. And then you need to go to beta features and then make sure it's turned on. And this is also where you can have it not store your data. But this is how you adjust everything. So if you have plugins and if you want to browse, you can have the newer version. That is how you would access that. Okay, so I know that I want to look at IPOs. I also want to know very, very well the number of young companies that collapsed during that period. And I know that I need to know from a historical perspective, any regulation that happened, because that's going to be a change that's going to help us correlate and understand if a bubble is forming or what the differences is. And I know there was a lot, since there were, once we get the number of IPOs, a lot of what went into the .com bubble was the lift of the term escapes my brain, but the IPO period. Once you IPO, there's a certain period of time where you cannot sell that security if you were involved in the syndicate or that opening process. So there were a lot of IPOs. I don't have the exact number, so hopefully we can get that. And then what happened is once that sell period, or that period where you weren't allowed to sell, diminished, then there was a ton of sell pressure and it was just exasperated, and that caused the .com bubble, or helped with the .com bubble. In addition, thank you, blackout period. In addition to, of course, lack of fundamentals and promise of value based on lack of valuation. So that's extremely important to know. I want to make sure that it is taking that into account. So let's look at during this period, the number of younger companies that collapsed, in addition to blackout periods, and how that contributed to the crash. And of course, anything else you feel is relevant. I like to have it come up with its own stuff. So there we go. That's a lot, okay. So that's an important component to me. Is I knew they were operating at a loss, but I didn't know the exact number. What I do want to make sure that I do is fact check this. That's extremely important. I see that distinguish good information from bad information. This is I turned on the searching the web version, so it should give me some type of reference where it got that from. And if it doesn't spit that out, that means something's going on. It was acting a little wonky when I first got into this, and I see that it's not spitting out any sources. Normally it does that at the end and has a little caret. So that's going to be important for me to know. I can ask it to reference. And then what I would do is, this is when I would start using Bard and then have it pull charts and actual context, and then it will tell me exactly where it came from. So that's where I use both of these together when we start the analysis process. All right, so we know that there were promise of future profits. They weren't there. There wasn't any valuation. This is all known rate. Just put it in a better way. The context can provide a lens through which to view the current, blah, 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 which we can do next. So what I'm going to do is I know that it needs, I'm going to let it do its magic, and then I'm going to go over to Bard and get some good figures from an IPO process again. You want to scroll up to the query? There you go. I want to make sure that I provide it with what I'm looking for in addition to what it gives me. Thank you. Okay. Like that. Great. Can you browse? I'm going to do what you said there. So thank you. The web for information on the number of IPOs that were related to the .com bubble. And my spelling is terrible. I hate that you guys are going to see that. There we go. So that's a different number, but that's the same as before. Okay. So now I know that a period before the .com bubble was actually with the losing my words. I'm trying to do these two at the same time. The .com bubble, the period before that was a period of extremely low interest rates. I want to compare that to today because that is something where we could perhaps have a correlation. However, going into the AI bubble, we've had a higher restrictive Fed. So I just want to understand when that stopped so I can see properly if there is some type of correlation. So this is the way that I apply my anecdotal knowledge, just having somebody help me instead of just searching like crazy. So the .com bubble was preceded by an era of low interest rates that allowed for venture capital funding. Can you provide any data on this and any correlation to the AI frenzy? And I only want to go back maybe the past 3 years. Okay. And then I know when you have, I want to see where I got it from. Should be able to here. Bard has some more information, so I'm going to let it do its thing. Oh, that is interesting if you have it fact check its statements and it gets lost in search through it. That's why I want to set up the database. That way I give it reputable sources. Sometimes I do give it links. So I've gone through and perhaps pulled up, not perhaps, it's just my CBC talk. I give it studies sometimes, and I say, hey, this is a study that I think is done a really good job to understand how this has happened. Here's the link, and then go through that. A matter of time before, I'm sure it's possible. Let's see. And it's way before it. All right, there you go. So they lowered interest rates into it. What was the Great. Oh, and then that normally happens when we get really, really deep. So I'm going to switch over to Bard now. I was already playing around with it, and we went through quite a bit on the .com bubble. I will pull this one over here so you can see everything. My desktop is a mess. I apologize, but thank you for going down this journey with me. So it gave me some interesting figures from what IPO'd and what I was looking for at that time, and what came off of SEC studies. And that's really, really important because I know that's a reputable source, and SEC studies are the ones that set the government and regulations for the markets. And even when there was the GameStop frenzy, for example, you can go on sec.gov and pull any of their studies, and you could see if there was any change in market correlations and subsequent regulations that came after that. So because of a lot of my career history, I was working at a brokerage firm when all of that happened. And so I know what they do from a technology perspective, and then also the market mechanics that shifted. So for example, short selling rules, there are lots of triggers that happen on exchanges that prevent things from going down, hence why you see them halted quite often. And that's all to mitigate any type of bubble type of mentality. So I think that's important to know, but something I want to find a correlation of is there, which is difficult to do. Why I think things like this are extremely helpful and important. So nonetheless, we went through some of that. What I thought was interesting is it gave me a larger number of IPO'd securities. I'm going to believe Bard because I started there because it gave me an SEC study. I will pull that study later on and then do my due diligence. And I don't want to take you through that because it would just be a lot of quiet time of us on the call. And there's no use of that. However, now that I know an indication of all of the IPOs that were there during the .com bubble, there we go, the 4,500, and this is how many that took place during 1999 through 2000. That is quite a bit. There has been a lot over the past 5 years. That's what I wanted it to analyze from an IPO perspective, especially if the bubble mentality is also younger companies and lack of valuation. And lack of valuation tends to come from anything that it's difficult to understand. I think a great example that might be relatable is crypto. Crypto is something that is newer and people don't understand it as much. Therefore, it's a little more volatile because it's difficult to attach any type of valuation to it. Not saying the cryptocurrency itself, but any companies that are invested in that, hence leads to collapses like FTX. Just mania, crazy, exactly. So those are things that I want to take a look at. What's interesting is I asked it to narrow it down. I didn't want to know the top 10 companies. It's great to know that the IPOs that happened during 2018 through 2022, I know that was a really low interest rate period, and that's free money, which is great for venture capitalists. You can go and borrow money at a very, very low rate. Therefore, that paves the way for exceptional growth. And that really low interest rate structure came post great financial crisis. So that's something I've been studying for a while that I of course want to apply anecdotally, is this crazy growth frenzy. And now we're in this credit crunch or the stop of growth, which is something that the Fed tools are looking for. Anyways, nonetheless, what I thought was interesting, and I want to fact check this, there were only 10 AI related stocks that went public in the US over the last 5 years. So regardless, if Bart is right, or if ChatGPT is right. And again, we're going to fact check it and make sure we have a reputable source before we go any further. Regardless, that is a considerably smaller amount in comparison. So therefore, I know a lot of companies are mentioning AI, but what the correlation that we wanted to understand is, is this a bubble? Is there aren't a lot of IPOs coming onto the market or newer companies that we have to understand if they have proper valuation or not, and those blackout periods. I think I saw snow earlier on other ones. But yes, that's why we also want to fact check it. Is it gave me 10. I want to know if there is more. To me, that's definitely not a lot. Fact checking is extremely important, so we can double check that. SPACs is something that I'm not going to count, but we could look at that as well. That is a great thought. Thank you. I'm going to even write that down. And your name attached to that. Oh my God. Right. So now what I want to know from there is regulations after the dot-com bubble. This is the only one that I really cared about. The financial reporting and financial statements. I know that anything that's listed, there are higher transparency requirements. We do need AI for our AI. Things like that are important to know because, again, regulations, the purpose of them are to prevent these type of frenzies. People just want an orderly, steady market. Valuation changes, I thought, would be extremely important because we've changed the way that we've valuated securities. Now, something that came across my radar after I was preparing for this was a really great study. And maybe we should bring this up. It was a really great study that Bloomberg put together, which was the valuations for companies have really changed. So there was something that I've called out and I saw when I look at earnings, I look at a refinitiv report or a fact set report. But all of those are free. You can just Google them, fact set earnings insight or refinitiv earnings insight, and you can see the trends of beats versus misses on revenue and earnings across sectors. And then you can see the shift. And what I thought was really interesting is, and of course, forward-looking guidance given, which is optional, is I saw that there was an uptick in this beat rate. It's about 80% within the technology sector, which is something I've been focusing on. So this last earnings, we came into the earnings season with the highest amount of fact set. Yeah, that fact, I'll put it in here. Fact set. The earnings that we came into earnings with the highest amount of negative forward-looking guidance since Q3 of 2019. Forward-looking guidance is completely optional. However, it was highly in the tech sector, which makes up the biggest concentration of the S&P 500. So that set the stage for beats, which we absolutely saw now that we're at the tail end of earnings season. There was a study that I saw on Bloomberg that said analysts are now, the people who are focused on this, the way that they are valuating securities really sets them up for beats now, which is certainly interesting. They'd rather be wrong on the upside than on the downside. That makes sense. And then additionally, CEOs are now more incentivized their plans to beat earnings. And if you work in any type of strategy type of role where you go through business cases and KPIs, that is something interesting to just kind of apply anecdotally, is knowing, okay, everything trickles down. Everyone wants to make money, and the person making money for the entire company is the paycheck of the CEO. So if they're incentivized to beat earnings constantly, then that's going to come to fruition because that's always going to be in their mind, even at the larger, broader corporations. So an interesting study. So maybe we want to find something from evaluation and understand and validate that. It would be great if I had a database set up so we could put in a plugin and then we could have it analyze the entire PDF. But nonetheless, know that's coming and things that are on my mind. So let's ask that to Bard. Can you find any trends about earnings beating expectations based on valuation. Sorry, I need to turn Teams off so you can see that. Can you find any trends about earnings beating expectations based on say the last 3 years, and just see what happens. All right, so there we go. And that's really interesting to me. And I know I've read that on Refinitiv and a couple of other reports, but I think that's also good to know when you're going into an earnings season to understand how things are analyzed. And also with BARD, which I think is important to know, is you can see its variation. So there we go, FactSet, love that. I want to read this one. According to FactSet, because I know that is a reputable source, a steady decline over the past 3 years. Okay. Those are all good to know. All right. And this one says it's been increasing. But that's in 20. Okay. Interesting. Okay. So this is basically the way that I've been using this today and going through this process is just a way to get thoughts that are in your mind for a more broader macroeconomic view and get some data rather than just blindly Googling or going into your data sources to understand the current market and components. So when you're trying to compare something like AI, or if there are bubble mentalities, which is something that I keep hearing all too often, this is a great way just to compare and contrast, just to understand. Now, what I do think is interesting, and something I did earlier, and I didn't do a good job of it, so I'm not going to share it with you, but is the AI or bubble mentality, not AI, but bubble mentalities are overhype, and you're placing valuation when there is no valuation. So it's just hype. But your hype becomes real when there is actual valuation. And we saw that with Nvidia earnings yesterday. Margins expanded and things like that. I was hoping we could have it analyze it and give us that type of information, but unfortunately that didn't happen. But I believe it will when we set up a database and have plugins to read PDFs. So that's unfortunately the larger issue. Now, this is extremely helpful, and this is giving me the information that I needed just on number one with what we were asking ChatGPT here. So let me refresh it since it's not giving me what I need. And we asked it for just the historical context. We've got that. Now, if we want to go into the current state of AI stocks, that's when we would just go on to the next bullet point and then move from there. A short description of what you do at ChatGPT. Okay, that would be great. So I always thank it. Thank you for that information. Can we analyze? And what did it say? The current state of AI stocks, inclusive of earnings reports, VC funding, and overhype. And Eric, I love that question about the Nvidia earnings reaction and valuation actually being improved. So that's where it is less expensive today based on the adjustment. So whenever you are thinking of, as there are different types of securities, you've got your growth securities and then your income securities or your steady guys. Mainly what that means is when your company is creating or stock profit, it's going to give that profit back to you in some way, shape, or form. It could be in a form of a dividend. So those are your income securities, tend to have those steady PEs, or it should be in the form of growth. So if they're not giving you a dividend, they should be taking the money that they're making and putting it back into the company to grow that security. It's this weighing model that has some other implications associated with it. So whenever you are talking about something like Nvidia, and a lot of people on the street or whenever we talk, we say, oh, this is expensive relative to the market. We're looking at forward PE ratios. In fact, if you pull that FactSet earnings report, you'll see that's the current. We want to look at forward year. I think it adjusted to even 30. So forward year PE ratio of 30 is still way overvalued for the S&P around, might be 19 now, whatever that FactSet report says. However, in comparison to other AI stocks and where it was yesterday, it is cheap in comparison to valuation. So if you think about the math equation with that, the price to earnings ratio, that means that the earnings you feel like are incorrectly priced, so in other words, you're just simply saying, I feel like this is going to make way more revenue than the analysts are predicting for this security. Therefore, it's a higher inflated PE ratio. That's basically it, which is what happened with Nvidia. And now it became less expensive because there was analyst adjustments to a higher earnings expectation. So if you divide a current price by a higher number, that's why you got a lower forward year PE ratio. So that's why we call it less expensive security. That is why analyst, I think it was something like 12. That's the next year's expectation. So just super interesting there. But that's why it's less expensive today than it was yesterday, because based on the earnings, analysts said, hey, there is actually more promise of value there that's happening. Now, that's what's important to think of when we're looking at securities, and something that I wanted to, and I know we're running short on time, when we get us going through this thought process here, is when we pulled the securities that actually made it through the dot-com bubble, we've got ChatGPT not working for us, that made it through the dot-com bubble, they were Google, right here, Amazon, eBay, maybe not necessarily Yahoo, but Netflix, and Google, that were born through the dot-com bubble. Therefore, if there is something where, even though it was part of a collapse and a broader productivity increase, there was a promised future value that came to fruition. So all of this came down to management and proper valuation. And just like we've had this really fast bank run with Silicon Valley Bank, that happened with the use of technology. And this is what I think the huge difference is with that comparison that's constantly comes up with the dot-com bubble and the AI frenzy or mania is essentially that for the World Wide Web, there weren't a lot of people that had access to it. There needed to be infrastructure to be set up. So therefore, this massive adoption isn't something that it's something that took more time and so on and so forth. Whereas the Nvidia or the AI frenzy, we all have access to the internet now. We have access to technology. We know that it's applied in every single vertical and the amazing capabilities that it can do. And additionally, we're in this type of culture where we have this side hustle culture where people are having separate income streams and then utilizing this to optimize it. I think the last most important thing that I want to further analyze, which I will do, is the biggest macro headwind, of course, is the inflationary environment. And Powell says unbalanced labor market are very, very often, all too often, right? There's a way to bring equilibrium back to the labor market. And instead of, it's either A, you have more labor supply, so more people to fill those jobs, or you have less jobs. Those are the two. Or if you're a company, you could have an increase in productivity, which means you don't need less jobs. So that's an input that could go into that. Therefore, since AI and these generative AI models increase productivity, that's a way that can help with operating expenses, which translates to profit margins, which we want to see expanding, which is interesting because we have seen some margin expansion, which is odd going into recessionary fears. So that's something I think worth exploring. And what Bard and ChatGPT can certainly help you with is analyzing that thought process and giving us more information on even productivity numbers. So that's something I want to do next, but I know we ran out of time. But I'll show you the website that I use that I did have bookmarked. This is tradingeconomics.com. Again, don't need a login for that one, but this is what I use for economic data because I can pull it for a large time frame. And this is the productivity numbers. So I want to understand that. You can even go US or even more broadly. So this is really good. I was going to have it analyze it, but something that you can do is in ChatGPT, I could say, please use this to analyze how productivity has changed and tell me if you can find any correlation with artificial intelligence securities. And then that will give us an idea if artificial intelligence is that solution to the larger macro headwind. So it's taking our theory and hypothesis and giving it reputable sources in order to validate those, of course, with some data. So that's how I would do that. The way that I saw a question in there, that's how would I use ChatGPT versus Bard? I like to use ChatGPT, and perhaps it's because I've been using that for quite a while now, to have a thought process. Sometimes I think about things in a very neurodivergent way, I suppose, and it's everywhere. So it can bring it together, and I can also use it to help think through certain type of concepts. So what I was hoping to walk you through, and I'm sorry we ran out of time, is once we got to the point where we came up with a list of securities that are emerging from AI, I want it to tell me to spot trends or if it's undervalued or overvalued, and then compare that to the securities that made it out of the .com bubble. That's how I would use it to analyze any type of good or security or trading ideas, essentially. So I'm sorry that we couldn't give you that directly, but hopefully this was helpful in at least thought processes, and I give you an insight into the way that I look at the stock market and compare and contrast based on what I know are macro headwinds and possible solutions that are there. All right. Okay. Thank you, Eric. I am out of time because I have a 12-year-old and I have to do homework, but thank you for that. All right, well, I hope this is helpful. This is very, very, very different than the type of presentations that I give you guys. We always take feedback extremely, thank you, extremely, it's important for these type of sessions that we create. So if you have any sessions that you want us to do outside of this, or of course, in addition to any options type of strategies, please let us know. info@optionsplay.com is the best way to let us know. You've got Phil, who's on the call, who is wonderful and supportive, and we'll make sure that that comes to us daily. We can make sure we cover that. Why does the market always hype too much or always expect crashes? I love that. That is always, it's a FOMO and it's a fear. And there's just so many people, I feel the market is more retail participation, and that sometimes things that make really great headlines cause that type of frenzy. But the market's been sideways, if you really think about it. Madness of crowds. There we are. All right. Thank you. All right. Well, thank you guys so much. I hope you have a wonderful day. Thank you for choosing or joining in this session. We'll talk to you guys soon.